I just want to make sure that everybody understands the early cash cutoff, the reason for it, and how it functions in your financial reporting. So, the early cash cutoff is strictly a function of cash. It doesn't have anything to do with your financials. Okay. So, we don't keep cash books, we keep accrual books. We would like cash books maintained to the extent possible. So, if you didn't send me cash trial balances, for example, at conversion, if you want to work on truing up your cash books, I can absolutely help you with that. Not a problem. You may be able to do it yourself depending on what the corrections are that are needed. So, for example, at conversion, I wouldn't have known where AP amounts would have need to be adjusted out. So they would have come in as just AP. Any prepaid rent would have come in as prepaid income on the cash books. I do generally make that correction, but there are other things that it wouldn't be possible for me to figure out. So they aren't corrected on your cash books. So if you would like to true them up, please reach out to me. That's fine. But the cash cutoff is only a function of your cash. It's not a function of your entire financials. Even though the cash cuts off on the 15th, your financials are still complete through the end of the month. So your accruals still go through the end of the month. The point of the early cash cutoff is to give you 2 weeks to complete your financial reporting. So generally, your first step after cash cutoff is to reconcile your bank. And the reason you want to reconcile your bank first is so that you can close your AR and reduce the number of transactions that come in after the cash has been cut off, because it will still be important when you finalize your books to make sure that that bank reconciliation that you have completed that reflects your GL cash balance when it was completed still ties to the cash balance at the end of the month, because it's really easy for people to forget and book journal entries to cash, to if you've left AP open, to create checks to cash, to do all these things that change your cash balance. So your bank reconciliation is no longer a reconciliation for your cash balance. So, however, the thing you cannot control at all are receipts coming in from Commercial Café. So that's why it's important that the first thing you do is reconcile your bank and then close your AR. We close your AR for you as of a scheduled date that we send out to you, but you can always close your AR early. There is no reason that as soon as you've done your bank reconciliation, you can't go and immediately close AR for yourself. Instructions for doing that are available online. It's pretty straightforward. However, because tenants can pay at any time, they may still get in under the wire before you have reconciled your bank. And so you still have transactions that have hit the period, hit the current GL balance, but are dated after the cash cutoff. Because of the way Yardi manages its bank reconciliations, those are going to create reconciling items. All you have to be able to do is support your reconciling items. And when you are creating reconciling items in Yardi, they are just to accommodate timing differences. They are non-financial and they aren't something that you have to match up, right? Because what it's saying is this receipt that was received after the 16th is a deposit in transit. Well, once the actual deposit shows up, you don't need that anymore. It's already actually there. So you don't need to create another adjustment to clear the first adjustment. You just clear the adjustment. I hope that makes sense because that confuses a lot of people. It's just recognizing a timing difference. It is non-financial. So it's like you were using Excel and you were typing into Excel deposit in transit. So you don't need to do any kind of other transaction in the system to offset that. It's just like a memo. And so once you no longer need the memo because the deposits are actually pulling into your reconciliation, you just check off that to say, I don't need this memo anymore. I've had people who've tried to create offsetting entries in the next month, and it's not necessary. Checks are the next thing. You have control over checks as well. Once you do your bank reconciliation, you can absolutely choose to close your accounts payable. That is entirely up to you. We close it later in the month to allow you to continue to book AP if you want to, so that you have fewer accruals. You're going to have to weigh for yourself, do I want to book more accruals and therefore have to accrue something and then also book the payable? Or do I want to close AP, sorry, do I want to leave AP open and just book the payables and not have to book the accrual? The drawback is that you really want to try and book the checks in the next period. And when I say next period, they are still always dated the date the checks are issued. That's the other thing we ran into is people are like, oh, I'm in March now, my checks need to be dated March. Or, oh, I'm in March now, I can't issue checks until March. No, your checks are just dated the date they're issued. So if you issue checks February 16th, they are still dated February 16th, but they are posted in the March period. So that's another difference. It is not bad or good to have checks that are issued after the cash cutoff, but unlike receipts, which we generally cannot move, I can get into the complications of why we cannot move them, but generally we cannot move receipts. Checks we can very easily move as long as the AP is in a previous period or the same period. So if you have put the AP in February and the check in February, we can just move the check to February for you. That's super easy, not a big deal. So please keep that in mind. Both of them, you can find these reconciling items by running the transaction register. I've got a screenshot of that here. You're looking for any transactions that occurred after the cash cutoff. And because you are restricting it to the period of just the current period, you can put the end date of that far into the future because it shouldn't capture anything after the end of January because it's only looking for things posted in January. Sometimes it helps to catch things, particularly like in December when people are both posting things to December and things to January and they've just accidentally fat fingered a date. Sometimes it helps to go really far out. Checks are exactly the same way, only the drop down will be check instead of receipt, and it will be exactly the same dates, the current period, but occurring after the cash cutoff. And in both cases, your reconciling item in your bank should tie to this total, assuming you do not also have other. If you have both checks and AR, it will be the net of these two. But if you only have checks or if you have both checks and receipts, it will be the net of them. But if you have only one or the other, it will be the total on the report. In either case, you want to book a transaction for each item. You don't want to net them together because one is checks in transit and one is receipts in transit, and they're not the same thing. And you want to include this report as support. Finally, are journal entries. In general, you don't want to see journal entries booked after cash cutoff to cash. There's not generally any reason for that. We can move those transactions or we can unpost them so you can fix them so they have the correct date. Your bank rec will not pick them up if they have a date after the cash cutoff, but it will be pulled into your GL, so it can get very confusing. So generally, you don't want to enter journal entries as reconciling items. You want us to actually fix those. So again, the purpose of the early cash cutoff is to allow you 2 weeks to complete your financials so they can be completed on time, but your reports are still considered through the entire month end. So you're still booking accrual and income for the entire period. None of that should be prorated. The flip side is, yes, I know your management fee receipts are only through the 15th, but in general, if your tenants are paying timely, most of the receipts received after the 15th wouldn't be included in your management fee anyway, because they would be prepayments. And if they are for past due amounts, they generally, hopefully should not be materially affecting your management fee. If you really feel they